I'm finding sponsors that I trust and that I have a relationship with, that they have a good track record. And I'm putting my money with them and I'm going where the money makes sense.
Welcome to the Going Long Podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. And yes, I'm your host, Billy Keels, and we have another amazing conversation today, one that you are absolutely going to love. So full of energy and such great ideas and things that I know that you're going to be able to put into practice and help you get to your goals much faster, much faster. So before we get into today's conversation, I just want to remind you of a couple things. Number one, thanks to you and a lot of the written reviews that you're leaving and the honest ratings and honest written reviews that this podcast continues to move up to the top of the charts. Most recently, of the 2.8 million podcasts that are out there, our Going Long family, we're now in the top 1.5% of podcasts that are out there. So I want to thank you so very much for continuing to be here as loyal Going Long family members. And if you have not had a chance to leave your honest written review as well as rating, I would ask that you do that because it also is a great way for us to continue to be able to attract phenomenal guests that are going to help to add more value to you, give you new ideas so that while you're running on the treadmill or listening or just sitting down taking copious notes, you're going to get the absolute value that you need. So if you haven't had a chance, just leave us an honest written review as well as a rating. We make it really, really easy here. Love you to do that on the Apple podcast. It's something that we would really, really appreciate. And if you're not an Apple user, well, that's fine. We've got other ways for you to do it as well on other platforms like Podchaser and things like that. So that's the first thing. The other thing is a lot of you have been asking about how can you find previous episodes, like when we first got started, like you want to binge from the very beginning. Well, if you want, you can go to the website, which is billykeels.com. Once you get there, just go find the podcast tab and you can find every single episode that we've ever done, right? Go to billykeels.com. And once you're there, go to the podcast tab and you can find every single episode. You can find you can find the notes of what the speakers' answers were. You can find the video version. You can find the audio version at billykeels.com and then find us under the podcast tab. And then lastly, know that a number of you are accredited investors and you want to be able to connect with other accredited investors and talk about things that are relevant and also look for specific opportunities, investing opportunities. If that's something that's interesting for you, feel free to send an email to aiclub@billykeels.com. Once again, that's aiclub@billykeels.com. So with that, you're going to get connected with other people. You and I can have a conversation and look at having you become one of our new club members. So the aiclub@billykeels.com. Just send an email there and we'll get connected. So as for today's conversation, you're really, really going to love this. If you are into high energy conversations, if you're into thinking outside of the box, yes, you're in a highly paid W-2 role right now. You've got a lot of responsibilities. And at the end of the day, even though you are absolutely crushing it, if you've been in a situation where you got like a 2% raise and you were like, well, hang on a second, I just crushed it. And why am I getting a 2% raise? Well, you're going to kind of understand why this guy decided to pivot, created some new opportunities for himself, also got into a family business that he had kind of been running away from and avoiding. And he talks about a number of the different ways that you're faced with challenges every single day. And you have a unique opportunity as to what you're going to do with that challenge. Just like one of the reasons you're listening and watching today, like there are a lot of different things that you could do. You could just continue to go to your job and do that every single day, or you could do that and be happy about it. And at the same time, build the roadmap for yourself that's going to allow you and your family to get to the goals and dreams that you have for yourself. Now, you can do it whether it's a family business, you can do it looking at new different types of opportunities. And also this guy's going to talk to you about the development space and what are some of the unique opportunities that are there, some of the challenges that he's seen so that you can get to your goals faster. And you know what, potentially add development as part of one of the pieces of your portfolio. So I know you're going to get a lot of value out of today's conversation with our guest, who is Mike Holman of the Overland Group. And I'm sure that you're going to love it. And we're going to get to that just after this. Whether you're an active investor or a passive investor, you really like your day job and you want to continue to go into your day job every single day feeling better, knowing that you've created the right options for yourself. At the same time, you just don't have enough time to really get your head around, spend all the hours investing long distance. Well, One way or the other, over the last number of years that I have been investing long distance, I've really understood a number of the major mistakes that you should avoid if you want to get to creating the right options for yourself much faster and being able to create more income sooner. And if you want to do that, if you want to understand more about that, I've made it really, really simple. You can just go to billykeels.com/7 mistakes to avoid. You can learn all the things that the 7 major mistakes that I've seen over and over again that I want you to avoid. Once again, you can go to billykeels.com/7 mistakes to avoid. So, you know what? If you want to know how having a family-first approach combined with strategic partnerships can lead to your long-distance investing success, then guess what? Today's a conversation that I'm going to bet that you're going to want to stick around until the very last word. You know why you're going to want to stick around to the last word? Well, it's pretty easy because today's guest not only started his professional career working for a Big Four accounting firm as an assurance staffer, and I'm sure he's going to tell us a little bit more about what that all means. He then began to focus on a very specific area of development and as well as acquisitions. And today he's leveraging a lot of that as the VP of Investments and Finance at the Overland Group. And it gives me great pleasure to welcome to today's conversation, Mr. Mike Holman. Mike, welcome to the show, man.
Thanks, Billy. It's a pleasure being here. Excited to be on the show.
Hey, man. So everybody just hold on because Mike's got focus, energy, passion, and it's going to be absolutely awesome. I am looking forward to this. And by the way, if you're not watching us on the video version, I'm going to guess that you'll want to stop and kind of check out the video version, even if you're already starting to run on the treadmill, I'm sorry, or switch over to YouTube or one of these others and check out the cool jersey that he has over his right shoulder. When you're looking at the screen, it's going to be on the left. But anyway, hey, listen, Mike, let's get into the conversation, man. As you know, we've got 5 questions that you're going to get because every single guest here on the Going Long podcast gets 5 questions. You're going to get 2 in the beginning, you're going to get 3 in the end, and in the middle, we're going to chat for a little while, and the entire Going Long family is going to get a chance to know you, learn from your experience, and also be inspired by you so that they can go out and take action. So, you know what? Let's go ahead and get started. And the first question, as you know, is help us understand where exactly do you live in the United States?
So I live in Salt Lake City, Utah. So the best reference for Salt Lake City is the 2002 Winter Olympics. So anyone who remembers the 2002 Winter Olympics, that's where I live. So a lot of great skiing, snowboarding, winter sports. But that's where I live. That's home base for me.
Awesome, man. Salt Lake City, fantastic in 2002 games, which was a lot of success. So other thing is, we love starting out the conversations here with positivity. So Mike, help us understand, man, what is the most positive thing that's happened to you in the last 24 hours?
Well, you mentioned the family aspect at the very beginning of the show. And to be honest, the best thing that's happened to me in the last 24 hours, I got to spend 1 extra hour with my kids yesterday. I had some things fall through at work, which was unfortunate, but you want to know the blessing of that? I got to go home. I got to spend an extra hour with my 2 kids. I got a 4-year-old girl and a 1-year-old boy. Was fantastic. Love spending time. Got to go play around in the basement.
That is absolutely fantastic. And you were gifted time. I love how you pivot. You look at that when there's something that goes down, you have the option. You either kind of dwell on what you don't have, which is the meeting, or you realize that you're gifted in this instance time. And so being able to spend that with your 4 and 1-year-old, that's just awesome. And I appreciate you sharing that with us first thing today and first thing in this conversation. So here's the thing, Mike, and I always kind of joke, right? Because you've been doing a lot of things, you're impacting lots and lots of lives, and you have a story. And I kind of try to tell that story in 6 seconds? Not even possible. So help the entire Going Long family if you could do much better telling your own backstory than I did, that would be really, really awesome. And the one thing that I do ask is that you can also think about some things or more than things, but think about some of the really specific decisions that you made to get to this point in your journey. And then we'll kind of see where the conversation goes from there.
Absolutely. Love to. So really where it kind of started for me, Overland Group is a family company, right? So actually my father, Ken Holman, started Overland about 40 years ago. So I like to say real estate's kind of always been in my blood. That being said, I never had any intentions of going into real estate. So I went through college. I got a master's of accounting degree. You mentioned I went to a Big Four accounting firm. I worked for Ernst & Young, EY, in the Salt Lake City office. I did all the assurance stuff. So I was auditing big public companies. They'd give me all their financials. I'd be going through them, all of that kind of stuff. That was great. There was some things in the corporate life though, that I wasn't enamored with, right? I mean, that's kind of what led me to kind of pivot. And one of those big decisions that happened they've since changed this, and I love Ernst & Young. But one of the things they did while I was there, and this just happens when you have a company with 200,000 plus employees, they kind of came back and they said, you know what, we can't tell any of the staff ones apart. And so for this year, we're going to test a new thing. We're going to give everybody the exact same raise. Right. And for me, it was like, that's completely not my attitude, my mindset. I was like, that's just rewarding mediocrity. I was so frustrated. I felt like I'd killed it. I'd done all these things. And so that's kind of when I started looking at other opportunities. And you know what, like I said, I never meant or had any intention of coming to the family business. It just I was looking at the situation and I figured out, what's important to me. And what was important to me at that time was I didn't want to feel like a small cog in a big wheel, right? I wanted to make an impact from day one. So that's when I made a leap from a company that had about 220,000 employees, all the security in the world, to a company that had less than 20 employees, and was kind of right on the beginning stages of a potential growth phase. And so that was a big decision for me. It was monumental. Everybody kind of looked at me like, you're crazy. You're leaving. Like, you've worked so hard to get to this dream job. You got your CPA, right? Like, you went through one of the top accounting programs in the entire nation. Like, what are you doing? And you know what? It was kind of an honest decision to look in the mirror and say, I'm betting on myself, right? Like, I believe that I can make things happen if given the opportunity, and I need to go somewhere where I can be given the opportunity. And that's when I made the pivot. So since then, I've been doing a lot of development, right? I do a lot of the financing. I'm really in charge right now. My aspect or my responsibility within Overland Group, from the second we go under contract for a piece of land until I hand it off to the construction team, I do all the work in between there, right? So all the entitlements, I manage the architects, engineers, and I have a special focus on financing as well. Just given my background, I work with a lot of investors. I work with a lot of lenders, right? I talk to a lot of those groups. When we have a $60 million project, it's my job to say, how are we going to get $60 million? And I'm thinking about that through the whole process. And so that's really kind of my journey, what led up to here. It's been fantastic. It's been 4 years. We've been in hyper growth mode, which has been really fun. But you get all of the stresses that come with hyper growth as well. But you know what? It's been fantastic. I wouldn't trade it for the world, because it's been such an opportunity for me to try and showcase, to try and push forward, to avoid that mediocrity that I so much wanted to avoid early on in my career.
Yeah, avoidance of mediocrity, and I think anybody who's actually watching or listening is probably like, I don't think Mike is one of these guys who's out there just trying to be the average person. There's nothing about you that says average. And so I guess one of the things that I'm thinking about, right, because when you go through and so you're second generation, right? When you think about where you are today, but you had this very track that you were going on, and that was, you went to school, you got you got the right degree, you got the right titles after the 3-letter words or the 3 letters after your name. You started in EY, so really big global brand, 200 some odd thousand employees around the globe. But then there was this moment that was kind of like, well, I'm out here and I'm crushing it, and I'm just going to get the same kind of recognition as how I'm going to say it as everybody else. So that left you feeling a little bit empty. But I'm just curious as to, kind of how did that work when you decided to go to EY, knowing that you had this family business that was there? And I'm sure that if you're just giving us just a little bit of the energy and focus and know-how and knowledge that you're doing now, that your parents must have seen this from day one, right? And so how difficult was it for you to go, wow, you know what? I'm just going to go out here on my own instead of kind of taking this organization to the next level or being a part of my own family's company?
Yeah, that's a great question. My father likes to say he knew from the very beginning that I was coming over, even though I had no intention of ever coming over. And so really the beautiful thing is I was never pushed into real estate, right? My parents were never people that felt like they needed to push me to do anything. I don't know whether that's because they just, that's not who they are. They didn't feel like they needed to push me. I don't know, but I'm grateful for it. They've always let me kind of make my own decisions and figure things out and figure out life on my own. And so I never felt pressured into going into the business. And so when I started, right, I had talked to a lot of people. In fact, I have 6 siblings. There's 7 kids in my family, and I'm the very youngest. I have one brother that currently works in the family business. So I had 5 other people giving me advice on all the things that I should probably do besides going into the family business, right? It just, and family business, right? Like a lot of businesses has had up and downs. It's been around for 40 years, but our business has been a roller coaster, right? I mean, we've had ups and downs, and it's not like I walked into a business that just had $1 billion in the bank account and we were doing, $5 billion in development all the time. Like, to be honest, like when I came in, there was a lot of times that we were looking at each other saying, okay, how do we make payroll in 2 weeks, right? We got to figure this out, right? Those were real situations that we were dealing with when I came in, right? And so it's not like I just walked in on a white horse and, somebody rolled out the red carpet and it's like, here's $500,000 salary. We're going to give it to you because your last name is Holman. Like, it wasn't like that at all. And so it was never like, oh yeah, I'm going to go in there because why wouldn't I? It's the easy path of least resistance. Overland has never been the path of least resistance. I mean, the path of least resistance for me was staying at EY. Yeah. When I was going through school, I knew I always had a knack for business, for leadership, for things like that. I toyed around with investment banking. I toyed around with, public accounting. Eventually I settled in on public accounting. And that's the route that I thought I was going to go. Right. I had no intention of leaving. I'm not one of those people. A lot of people, when they're in public accounting and they're working 12, 14-hour days, they're like, oh, I hate this. Like, I have to get out right now. I never felt like that through the entire process. It wasn't until I kind of had to take a step back and say, all right, this is the trajectory. And it's a really safe, predictable trajectory. I mean, anyone working for a Big Four accounting firm, you can almost guess their salary within like 10% just based on how many years they've been at the company. Right? I mean, it's that predictable. And the raises are good, don't get me wrong. But I'm not, maybe it's my impatience, but I wasn't willing to say, you know what? I'm going to just do my time for 15 years and it's all going to work out beautifully at the end. It's like, no, I would rather go out and grab something than let it come to me. And that's at Overland. It presented the biggest opportunity to make that impact, to have those decisions with the most immediately, right? I didn't have to go wait and do my time 10 or 15 years, because when I entered here, when you have a company that's 10, 20 people big, every single person makes a huge impact. And if you're willing to show that you can be trusted and you're competent and you can continue to take on more tasks. I mean, I just had an interview yesterday for a couple people that we're hiring. And I tell everybody, I was like, look, you can make your career whatever you want at Overland, and that's the attitude that we've taken. That's how our business is run. And that's worked out well for me.
And so the fact that that's worked out well for you, and just a couple of things that you'd said a couple of times, is that you didn't want to just do your time, which I think is a little bit ironic, right? Doing your time in the corporate and doing that for 10, 15 years. And then, because that would have been the path of least resistance. And I'm sure that you would have continued to make whatever level of impact that you wanted to make, right, within that corporate constructs. And there are also a lot of people that are part of the Going Long family that are high paid sales executives and working in the software space, or a number of doctors, a number of lawyers, and people that typically, we like what we do during the day. At the same time, we're just looking for something more. We want to be able to, as you talk about impact and figuring out, how can I not only make more impact, but how can I have more control, and how can you have more control over the outcomes of your life? And a lot of that starting with the finances and having that in place and in control, and then being able to leverage your most important asset, which is time, and doing the things with the people that you want when you want to do it. So that being stated, and you're helping us understand why you decided to carve out and move to this path, which is fantastic. But one of the things in the whole premise of what we're here is really helping people to once again feel comfortable and confident being able to invest beyond their backyard. Right. And I know one of the things that you do at Overland Group is not just invest specifically in Utah, right? But there are in, I guess, Salt Lake City, but there are a number of different assets that you continue to bring into the portfolio, managed and through vertical integrated stack, which I think is great. This goes back to the mindset piece, whether people want to do actively or passively. And like I said, I know I take it to the extreme because I live in Europe and I invest exclusively in the United States, at least as of today. But there are a lot of people that say, well, if I don't just invest in my backyard, and most of the books tell us that, if you're going to buy something, buy or invest right where you can go and be a landlord. And most people think that you're just going to buy that one house. And there are a lot of other things out there. So I know I threw a lot out at you, but can you talk to us about why you have personally, not just with the Overland Group, but even yourself, investing in assets that are not necessarily in your backyard, meaning just in Salt Lake City, because a lot of people want to understand, like, why would somebody even do that? Because popular culture tells us just to buy stuff that one single family residence in our backyard. Why did you decide to do long distance investing?
Yeah, I did it because I go where the numbers make sense. I mean, perfectly honest, that's the most important thing for me, right? And most of my investments are in syndications. That's most of my real estate, beyond my active portfolio. When I'm investing in a syndication passively. And so most of those are passive investments. I'm finding sponsors that I trust and that I have a relationship with, that they have a good track record. And I'm putting my money with them, and I'm going where the money makes sense, right? I mean, there's even in Salt Lake right now, it's not necessarily making a ton of sense. I mean, by a lot of accounts, Utah is the fastest growing state in the entire country right now of the United States. And the problem is you get a lot of big institutions, you're getting a lot of 1031 exchange money coming in here. That's basically saying, like, I don't care if I make a return, I'm just going to park my money here because why not? It's the fastest growing state in the US, right? Well, that puts a lot of pressure on someone like me who's like, hey, I got investors, right? I got to go make a return. I'm not just looking to park money. And so that's why I'm investing, right? I invest in Arizona. Our company's invested all over the Midwest and West, but I go where the numbers make sense, right? If the numbers don't make sense where you live, why on earth would you ever invest there? Like, there's plenty of professionals, and yeah, you got to vet the professionals, but there's plenty of professionals that can help you fill those gaps that you feel like you might be missing by investing, not 10 minutes away from where you currently live.
And once again, as you break it down, it's really about what numbers need to make sense. And also the fact that you're super clear, and this is an assumption, so I'd love for you to confirm this. Like, are you clear on what type of numbers you're looking for and where, like, and you understand why you're looking for those specific numbers?
Absolutely. Okay. I'm 100% clear, right? Like, I'm in my stage of life, right? I'm pretty young. I'm only 30 right now. As it stands, I'm 30 years old, right? I don't care so much about cash. I'm not trying to retire right now. I'm looking at asset accumulation, right? And I'm willing to take more risk than what most people might consider if they're investing at 75, right? Yep. So honestly, a lot of my passive investments are new developments, right? Because I'm looking for the biggest bang for my buck. I'm looking for asset accumulation. I'm looking for creating value. An extra $500 a month or $1,000 a month or whatever the case may be. Yeah, that's not going to hurt, but that's not necessarily what I'm focused on, right? And so that's why I'm targeting specific markets that aren't necessarily, like, you look at Utah and Arizona, those aren't cash flow markets per se. You don't go there because you're going to get a 10 or 12% cash return. You go there because the trajectory of what's happening in those states says in 3, 4, 5, 10, 15 years from now, those are states that are the values in those states are just going to explode well beyond where we're currently at. Right. And that's my focus. And that's what I'm looking at right now.
So understanding how you're looking at things right now and keeping it in the context. And I mean, you're giving us a great example, Mike, in terms of, where you are, why, where you are in your life, what you're looking to do, which is accumulate assets, because those assets accumulated over time, is one of the things that really helps us to appreciate. And so as that happens, then you will be able to benefit. So your game can be a much longer game. And you juxtapose that very well with somebody who may be in the twilight of their life and they're looking more for cash flow, consistent cash flow, because maybe they need that, or maybe they want that, or whatever the case may be. And once again, you're helping us to realize how important it is for every single person to understand what specific benefit they're looking for. And then afterwards, just like you said, then you go to the location that's going to give you the highest probability of being able to do that. You talked about being able to confide and vet a team, and then whether that team understands the market or the location, and then they understand what you're looking for as an investor. Then whether it's an industrial park or a mobile home park or ATM machines or energy equipment, I guess all of that, once it's aligned, it is going to help you at the end of the day get to the goals that you want. So one of the other things, because I want to talk about your sweet spot, which is really, we talked about that development and acquisition. So Help us understand a little bit, because we do talk about it sometimes here. However, talk us into the development. And when you talk about development, kind of what are the types of developments that you're looking at, and maybe what are some of the different locations that you are currently focused on?
Absolutely. So I love real estate development. I'm super passionate about it. So I could talk about this for like 4 hours, but I'll try and keep it pretty short.
I was going to say, I don't know if we have 4 hours. You and I could talk about it afterwards.
we might have to. That's probably why I started my own podcast, is I just needed a way to talk about real estate development more.
There we go. There we go. Wow, don't you just love this conversation? This is amazing. This is fantastic. And so just really quickly, I just wanted to remind you, for those of you that are looking to create more options for yourself, get there faster, and do that with long distance investing, make sure that you go to billykeels.com/7 mistakes to avoid, so that you can avoid all those mistakes, get to your goals faster and sooner. Once again, that's billykeels.com/7 mistakes to avoid. Now back to the conversation.
No, but
by the way, really quickly, because everybody's listening, drop the name of the podcast. Talk to us about it.
It's called the Executive Real Estate Investing Show. So you can find it on any of the podcasts. But we have great guests like Billy Keels and some of his colleagues that are on there. So and for better or for worse, you just hear me rant about a whole lot of things. So take that for what it's worth.
Awesome. But, we'll include it in the show notes. But anyway, sorry, I took you off track. Let's talk about the development space.
Yeah. So development, really the thing that we're focused on development, the thing that I love about it is we're focused on value creation. Right. I mean, at the end of the day, I always break it down to a really simple example, right? Think of Nike or Adidas, or when I was in London, it was called Adidas. I learned that it took me a second, but I realized Adidas in London when I was there. Think of them. They're building a new shoe, right? They create a shoe. When they sell a shoe, right, the cost of that shoe, including the actual materials, the labor, the marketing, right, that cost is a lot less than what they're selling that shoe to you for.
Yeah.
Same thing with development on a much larger scale, right? Like, so when we look at it, right, my goal, like I have one property, it's going to be about $66 million. We just started construction. It's in Arizona, right? It's a 240 multifamily unit project, and $66 million. I'm trying to create value. I just got my appraisal back for about $106 million. Right. And that's exciting. That's what we're trying to create, right? We're a little less focused on cash flows, because we're saying, look, when you invest in a project like that, you have 2 years of development and another year of stabilization. There's essentially 3 years that there's no cash flow, right? Like zero cash flow. And then it's years 4 and 5. When you're selling the property, when it's stabilized, that's when the cash flow is coming in. And you've created this huge disparity on here's what the asset costs and here's what the asset's worth right now. And we're trying to create as much disparity in that as we possibly can.
Which I love that. And the disparity creation, right, is one of the things that plays to the inefficiencies of many of real estate in general, right? And when you're able to do that disproportionately, when you get it right, you are also creating massive amounts of value. Now, you gave a specific example of like the 66 million or 66 million, but appraised for 120. Because it's something that's maybe a newer topic, like how frequently does something like that happen, that you can create so much value in a new development? Because I think a lot of people would hear, okay, well, it would cost 66, but maybe it was 90, but that sounds pretty big. And maybe just to help give some context to the Going Long family.
Absolutely. So it's in a lot of things in real estate, right? I'm going to go to a baseball reference, right?
Let's do it.
Sometimes you get singles, sometimes you get doubles, sometimes you get triples, and sometimes you get home runs. And what you hear most of the time from everybody is the home runs, right? We're all going for the home runs, but understand there are a lot of single and doubles on the way, right? So we're always striving to build as much padding and as much cushion as we can, right? This one, there's a lot that went into this. We're building this for a lot cheaper than what a lot of the people probably can in the market, because we have our own construction company and we're committed in that way. So we've created value there. But to be honest, there's another piece of this. As much as I want to just come in and say, look, I'm amazing and I'm fantastic, there's a market piece to this, right? And anyone who tells you differently is lying, right? There's a market piece. The market has gone up, right? When we first did the appraisal, it was going to appraise for $80 million, right? Still a good number. That's still what we're looking for, right? That's $14 million in value creation. That's still a really, people are getting all their money back and then 100% return on when we sell, right? You're getting probably 20% annualized return. If we held that for 5 years, that's still a good investment. That met our thresholds, right? But there was some market considerations, right? And the market's been moving up for us. And that's one of the benefits. But we're always looking in development more so than almost any other type of real estate investing. We always have to look at what's the worst case scenario, what's the likely scenario, what's the best case scenario. And what we always like to try and do is, hey, if we can go back and look at worst case scenario, can we live with that, right? What does that mean? Are we still making money? Are we breaking even? Are we losing a whole lot of money? And that's a lot of times where we have to make our decisions in the development world is what is the worst case scenario and what can we live with that?
So, and I love that. And so I would assume, right, and correct me if I'm wrong, because I don't like to do a lot of assumptions, but in the role that you're in today within the company, I'm assuming the educational training that you had, as well as the professional training, when you look at different scenarios, what's the conservative, what's the most likely, and what is the best case scenario, all of that previous training must really help you a lot today as you're going out and you're making assessments and creating specific type of value, or at least value assumptions.
Absolutely. All of it has played into that, right? And development is I'll say 70% analytical and 30% intuition, right? You have to have a little bit of that intuition in real estate development, because there's a lot of people that get into development that get burned really, really badly. I mean, I can't count the number of people that I know that have been great real estate investors and thought, I'm going to go into development because that's cool and sexy and awesome, and I'm going to do it. And they try and do something simple like a Starbucks, and then it ends up taking 6 months longer and costing $1 million more. And then they never want to do it ever again, right? And so I'm constantly having to look at those scenarios.
Awesome. So, and that's really cool. So one thing before we kind of get around to the Going Long final three, but what I want the entire Going Long family to really listen, and I'm sure that you've noticed the pattern that Mike is sharing with you, which is he's not just telling you about the home runs, and I'm even going to exaggerate a little bit more. He's not even just telling you about all of the grand slams, because that's what people typically are talking to you about. I mean, even one of his very first talking points, he was saying, hey, look, he got into the company business and it wasn't like this was a $5 billion business. Like there were things that they had to have real conversations like payroll. How are we going to meet that? How are we going to do this? So he's helping you to understand like the good, the bad, and the ugly, so that you can make the best decision for yourself. There's one other thing that you talked about, Mike, and I'd love just for your insight, because I've heard this a lot, and we're living in a very unique time, right? In development, it takes time to build. So a lot of times you may get that home run that you're looking for, but also too, kind of what are some of the things that you've been able to do, or maybe you've been exposed to when you have a plan that is supposed to start build in one particular point in time, and then because the world kind of stops for a little bit. Not that that would ever happen, of course. The supply chains are disrupted. That means that the certain pieces that are supposed to be there at a certain time, there's a lot less of them. And that could also maybe affect the amount of, timeliness that those pieces get there, and also potentially the cost. Like, how would you deal with that if your cost increased by, 20, 30%? Not that that would ever happen, but if you were ever to see something like that, how would you deal with that from a development standpoint?
Oh man, Billy, it's too soon. We need to talk about this in another. No, I'm just kidding. This exact scenario has happened to us. I mean, multiple times. I mean, here we are in COVID, and this is one of the things that we had to deal with, right? I'll just revert back to the $66 million, the 240 units, multifamily units that we're building. Yep. We dealt with this exactly, right? I mean, because we were in the times that we were in, COVID, I mean, that we had a 3 or 4 month delay from when we were supposed to start construction just from that. Then all of a sudden building costs come up. Well, we had another 2 or 3 month delay because the bank got a little nervous and needed to require a ton more information than what they would normally ask for to close on a construction loan, right? And so these things built up, right? In the middle of all this, my construction costs went up $12 million about, right? I went from a $38 million build just on the hard costs alone to a $50 million build on the hard costs alone, right? And here's the thing that I'll say about all of this. and maybe it's just my personality and the mindset that we have here at Overland. I am relentless, right? And that is a needed characteristic in this business. Because guess what? I have never worked on a deal that went perfectly.
I only laugh because it's like when people say pro forma. However, how frequently does it get to pro forma? Almost never. So So I love that.
Exactly. Right. I mean, you have to be able to pivot, to change directions, and to keep moving, or you will get eaten alive in the real estate development world. Right. I mean, that almost everything imaginable happened on that deal, right? Let me just take you through the difficulties of that. So I ran you through the timeline. I ran you through the cost. Well, guess what? We would jump through all those hoops for that construction lender. 5 days before closing, they came back to me and said, guess what? We're backing out of the deal. After I jumped through all the hoops, $50 million, 5 days before closing, right? We've been working on it for 9 months. I had to pivot. Right. And a lot of people, their mindset is, I'm going to go into a cave and die. Right. And you just can't have that mindset. You want to know what? We picked up the phone. We got 60 lenders available, and I got a loan. Happy to say I got a loan that was better than the loan I had before. Right. Wow. All of a sudden, my interest rate went down. I wasn't dealing with mezzanine debt or preferred equity as a piece of that. We won't get into that. But my capital stack was just one big construction lender. My interest rate went down. I went from recourse to non-recourse. I actually had a lot of good things happen, but I'll tell you what, for 2-3 weeks there, that was a really difficult situation and difficult time, because not only does it affect me, it affects the 150 investors I got on this deal as well. It affects all the partners and the relationships that we had made, because it takes a whole community, a whole group to do a development like this. And so, we had to deal with that, right? And you're constantly having to deal with those pivots and changes, and how you handle those determines your success in the development space, right? If you can't handle those, this isn't a space for you. It's literally how you handle those failures. It's kind of like people always are talking about recessions right now, right? And I always tell them, look, anyone can make money in a good market, right? If the whole market's going up, anybody who buys anything, it can go up. But the people what separates the good from the great? How are those people in a recession, right? How have those people been through a recession, and how do they handle it? Can they make money in a recession? Now that's separating the good from the great. And it's the same thing in development with pivoting and being able to adjust.
Love that. Love the fact, once again, you are sharing the reality, right? You're not painting this like fantastic picture and all this kind of stuff. But when you have an increase of $12 million just on the hard cost, and also too, when you talk about the hard cost, you're talking about things like the nails, the hammers, all that other, not the nails, not the hammers, but the nails, the wood, the whatever iron products, all of that kind of stuff on top. Like that's just the raw materials that you need to actually do the job. An increase of $12 million. That's pretty significant. But do you collapse? No, you decide to pick up the phone, you crush through it, and eventually you created, once again, and this is where you creating value or being a part of a team that's creating value is so important, because not only did you get that phone call that many people would have probably collapsed on, you actually worked even harder, found the better circumstances, and are able to, continue to talk about that, which I think is fantastic. So before we get into the going long final three though, Mike, this is like, I've got to ask you this, because a lot of people are thinking, wow, you know what, this sounds really, really cool. Like who are you typically helping today at the Overland Group? Like what are the clients that you're working with? Kind of what are they looking to achieve? Just help us understand what that person looks like and what they're trying to achieve, what benefits they're looking for.
Yeah. So most of the people who partner and invest with us, they're looking at it saying, there's all these different types of real estate investments, but one, it usually starts with just a curiosity of real estate development, to be honest, right? A lot of times they don't even understand the real estate development process or anything like that. It's simply like, oh, I know there's some guy on TV and he does real estate development and he's a mega billionaire. And so it's kind of sexy. There's like this cool factor with real estate development. That's a lot of times how it gets started. But once we start talking to them and showing them, hey, these are the benefits of real estate. This is the value that you create in the process. Just kind of like what I talked about with the shoes, right? I run that example through a lot of times with people on creating shoes and selling shoes. That's when all of a sudden it's kind of like the eyes open up, right? And so a lot of the people that we deal with, they are professionals. in their space that are looking to diversify into real estate, a lot of them have diversified into value add, right? Or because that's kind of a safe place to start for them, right? There's a building, a physical building, they can see it, they know and they understand it. A lot of times it's like, hey, they'll come off and most of the people that we have will have a real estate portfolio already. And they'll say, you know what, I'm actually looking to carve off maybe 20, 25, 50% of that portfolio. And I'm looking for how can I maximize my returns? And that's when they start usually coming to us to say, hey, look, I'm looking for a little extra bang for my buck. I got these that are going good. What can you bring to the table? And so our typical real estate investor is kind of in that boat. They usually already have real estate investing experience. I do get some that are brand new, right? But that's not typical. It's usually a transition for people. Most people don't get started investing in real estate straight from the beginning in a new development.
Got you. So typically people a little bit more seasoned, looking to make an expansion from not just value add, looking to also create some upside and also looking for growth through a similar asset class that can also provide other benefits that many times you don't find in the stock market. And I guess
exactly.
we'll kind of leave that there. They'll pick it up for another day, or they'll figure out, they'll reach out to us and be like, what do you mean by that, Billy? What do you mean by that? What was Mike talking about? And then we can keep the conversation going. No, listen. So here's the thing, Mike, like we got to get into the going long final three, man. But the thing is, I never, ever, ever, ever ask anybody to go along final three unless the guest, and today you're our special guest, unless you tell me that you're ready. So are you ready?
I am absolutely ready.
Why does that not surprise me, man? That doesn't surprise me. So here we go. So Mike, here's the thing. We started with you in Salt Lake City. So that's on the other side of what I consider to be the pond. So I want to bring it back over here to Europe on this side of the Atlantic. And I would love for you to share with the Going Long family, what is your favorite European city that you have either visited or still on your bucket list to visit?
All right, I'm going to cheat. I got two.
Here you go. Over delivering again.
I know. I'm sorry. Okay. Number one was Prague in the Czech Republic. It was awesome. Loved visiting it. Really cool culture. Fantastic. The other one that I really, really liked was Athens, Greece. Athens was awesome. There's, so much history, so much culture and I absolutely love Greek food. And so, that's one of the reasons I had to say that because, any kind of Greek food I'm obsessed with. So those are definitely the two.
All right. Fantastic. Sounds great. So Prague went first. And then you said Athens, so we'll go with that. So second question is, and this has a lot to do with kind of the experience that I've had in my life. So I've been very, very fortunate, right? And I know that you have met lots and lots of people, whether it was in your corporate, whether it was prior to getting to corporate, university, family, and now even you've got your own podcast platform, right? And so you get a chance to see and gain insights to a lot of really successful people. I consider you a very successful person as well, right? And so one of the things that I've recognized about really successful people, Mike, is that successful people typically are successful because they, unlike many, many people, like they don't make any mistakes, which allows them to get much further fast. Did I just say that? Did I say no mistakes? It must be stage fright. Or maybe it's by design, by the way. That's an inside joke with me.
I was all of a sudden getting a little nervous. You just said successful people get where they are because they make no mistakes.
Yeah, it's a little inside joke with me and the Going Long family. Don't worry. So kind of a joke, but here's the thing, like all jokes aside, the reality is like very successful people, although many people think not, like very successful people make mistakes and they make a whole lot more mistakes than most people. But the reality is they do one thing very, very differently. And every time someone who is successful makes a mistake, they typically, especially those that are important, they stop, they analyze, and they learn from the mistake. And then they do everything that they can, put different things in place to not repeat the same mistake again. And so what I would love for you to share with the Going Long family today, Mike, is what is not the mistake that you made, or maybe you call it a learning opportunity or whatever, but what's the one lesson that you know that the entire Going Long family needs to know today, because that's going to help every single person get much closer to their goals much faster? What's that one lesson?
That one lesson kind of goes back to what I said earlier, and that is be relentless, right? That is the kind of the theme of what I've tried to gear my life around is I've failed in some of the most horrific ways you can possibly imagine, right? I fail so much. Early on in my career, I might have failed more than I succeeded. But the key is exactly what you said, right? No failure. I think that true real estate investors that are the best at what they do, they view failure very differently than how the average person defines failure, right? And that's really important. So I look at failure, to be honest, failure doesn't even, maybe it's just my mindset. It doesn't even faze me, right? Like, I stop, I think, and I try and make, but I don't ever feel like a failure was actually a failure. And that's just been the mindset, right? And I think that's part of being relentless, is because even when I, fail or so-called fail, it doesn't necessarily detract me from my course of action, right? I pivot and we move forward, and that's what's made Overland successful. That's how we've grown. Our pipeline's grown 20 times over the last 4 years, and it's because of that mindset.
Yeah, love it. So continue to be relentless, and in spite of whatever is in front of you, use that as a learning opportunity. Learn from that. Put different things in place so that you minimize that chance of that happening again, and just not being relentless. So love that. Thanks. Appreciate that. And then this is the third of the Going Long final three, man. And this is really about filling our brains with whatever, right? Of positive things, knowledge. What is the one book that you would recommend to the Going Long family today?
Right now, I'd probably say What It Takes by Stephen Schwarzman. So he's the CEO of Blackstone. And what that does is, I was able to take pieces off of what I learned from that book. It's an autobiography, and put some of those things into place, right? I'm not trying to duplicate Stephen Schwarzman. There's things that he does or doesn't do that I'll never do in my entire life. But the idea of finding role models and people who have been successful in ways that you're trying to be successful, and replicating the good things that you do and the things that you can think that you can apply from their lives, I think is really important. So right now, that's what I would say.
Okay, perfect. What It Takes. So we'll make sure that we also include that in the section, in your specific section at the end of the podcast, so everybody can go check it out, which is absolutely fantastic. And these conversations like fly by. I can't even believe we're already at the end of time. I'm just thinking about you telling us from the very beginning. You're there, and you're at the end of your college career, and you're getting started at EY. And as you go there, you're crushing it, and you continue. You went from assurances all the way through. And as you realize that you were actually crushing it and over delivering at a company with 220,000 employees, well, everybody kind of, well, at least in your area, got the similar type of raise because it was a change. And this is what happens a lot of times in the corporate. And you thought, well, you know what? That just doesn't feel right. And all the time you kind of had your dad in the background thinking, hey, maybe this is the right time for me to go put this other little carrot in front of Mike. And it was the right time for you, right? And it made sense. And since then, you've been able to leverage a lot of your background and in terms of CPA, a lot of the things that you saw when you were getting started at a corporate. So you had a positive experience, and now you're able to leverage that and parlay it, and not in a world where you're just hitting home runs or grand slams, but you've also seen what it's like to really kind of barely bunt or even get to first base because you had to make tough decisions. And whether that was, trying to figure out how you come up with helping the company make the payroll, or what do you do when you have a $12 million gap for a development project that you need to get going? Well, because you're a very resilient person and you decided not to, just kind of fold your arms and collapse and cry over it and not do anything, quite the opposite. And so as you continue to help your company, as you mentioned, as 20 times your pipeline, maybe I'm exaggerating a little bit, but I know you said it was a significant increase in the pipeline over the last 4 years. I know that there's so many people that are thinking to themselves, wow, man, what Mike is talking about sounds really, really awesome. I've been thinking about development opportunities. It sounds like Overland Group has a lot of really great stuff, and Mike really knows what he's talking about. He's not just telling us all the awesome stuff. He's telling us about kind of the scars that he's had from being out on the battlefield. So I know that I'm going to get to talk to you again. And so I know so many people in the Going Long family are like, how do I get in touch with Mike? How do I find out more about the Overland Group? Help us understand, Mike. What is the best way for the Going Long family to connect with you, to find out more what you have going on at the Overland Group as well, or even more about your podcast?
Absolutely. So 2 best ways. like you mentioned, there's the podcast, Executive Real Estate Investing Show. From there, you can ask questions, right? They go on the show, things like that. The other way is through overlandcapitalcorp.com. From there, you can schedule a call with me. It's a Zoom call, so we can do it from wherever. And I have, and I always will, for as long as I can possibly manage, personally take every single one of those calls. From there too, you can also sign up for the investor portal. That's one thing I'd recommend, because that's how you get access. If you just want to say, hey, look, what is Mike up to? You go to the investor portal, it's going to list all our offerings, right? And we got a lot of stuff coming up, so you're more than welcome to go check that out. Those are really the best ways to get a hold of me.
All right. Perfect, man. Overlandcapitalcorp.com, which is a great place. And then also check out the podcast. We'll leave a link there in the podcast. Will you give us the name of the podcast one more time?
The Executive Real Estate Investing Show.
The Executive Real Estate Investing Show. Fantastic. So appreciate you sharing that. Going Long family, definitely go over, show some love to Mike on his podcast as well. And listen, man, Mike, I really just want to say thank you very much for taking the time and investing your time with me and the entire Going Long family today, man. Thank you so very much.
Thank you.
All right. Really appreciate it. And listen, Going Long family, man, Mike just left it all right here for you. And he's even giving you access to him. So take him up on it. I know it'd be a great conversation, value add conversation. For those of you that also like to find people on LinkedIn, when you reach out to him, definitely make sure that you leave a personalized invitation and say, hey, look, I heard you speaking to Billy here on the Going Long podcast and wanted to continue the conversation. He will appreciate that. I know that I would appreciate you doing that as well. So until then, I'm looking forward to welcoming you back on the very next conversation. So make it a great day. And thank you very much. Wow. Don't you love hearing from top-notch experts in the field? You know, when I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.